Ladies and gentlemen, good day and welcome to the Tejas Networks Q2 FY22 earnings conference call hosted by Edelweiss Securities Limited. As a reminder, all participant lines will be in the listen-only mode and there will be an opportunity for you to ask questions after the presentation concludes. Should you need assistance during the conference call, please signal an operator by pressing star then 0 on your touchtone phone. I now hand the conference over to Mr. Pranav Kshatriya from Edelweiss Securities. Thank you and over to you, sir.
Thank you, Faizan. Good evening, everyone. On behalf of Edelweiss, let me welcome you to the Tejas Networks Q2 FY22 earnings call. We have with us senior management of Tejas Networks headed by Mr. Sanjay Nayak, Chief Executive Officer and Managing Director, Mr. Arnav Roy, Chief Operating Officer and Whole-Time Director, Mr. Venkatesh Gadiyar, Chief Financial Officer, and Dr. Kumar N. Sivarajan, Chief Technology Officer. Without further ado, I'll hand over the call to Mr. Sanjay Nayak to start the proceeding. Thank you and over to you, sir.
Thank you, Pranav. Good evening, everybody. This is Sanjay Nayak. We had uploaded the earnings call presentation on our website, so I hope you had a chance to download that because I would be actually running through those slides. So I'm on the first slide, which is Q2 FY22 key updates. On the financial side, our Q2 net revenues were 172.8 crores, which is an year-on-year increase of 62%. Our PBT was 3.3 crores versus PBT of 4.5 crores for the corresponding period last year. Our Q2 bookings was 258 crores, and our order book has increased to 783 crores, which is around 82 crores higher than the last quarter's order book. We also during the quarter received strategic investment of rupees 837.5 crores from Panatone Finvest Limited towards preferential allotment of shares and warrants, and consequently our cash and cash equivalent has increased to 1195 crores. And just to remind you that this investment from Panatone is a subsidiary of Tata Sons, and 837.5 crores is out of the 1850 crores, which is the combination of primary plus warrants that they would be eventually investing. I'm also happy to inform that we have made a PLI application for telecom manufacturing, which has been approved by the Department of Telecom, Government of India, and the benefit of that scheme would start accruing from the current financial year. On the sales side, let me go through the three segments that we track. On the India government side, as some of you might have been tracking, we are participating in BSNL's proof of concept for the 4G tender, which is for a national rollout of a 4G network via a system integration partner who will be using our radio products, or what is loosely called the base station product. I'll talk a little bit in more details about that product later in the presentation. So the POC is on, and subsequent to the POC or the success of the POC, we will be qualified to get different portions of the network rollout of BSNL. We also won multiple tenders in the critical infrastructure segment, which is including safe city, video surveillance, and of course projects in the utilities like power and rail and so on. In terms of revenues, our contribution from India government was 13% of total for Q2. On the India private sector, which has been doing quite well for us, it was 46% of our Q2 revenues, and on a year-on-year basis, if I look at half yearly as an aggregate, because that's a better way to track, we grew around 47% on a half-to-half compared to the corresponding period last year. And I believe that by the time we finish this year, India private possibly will be the fastest growing segment of our business this year. We've been getting good business from the telcos, which is the operators for both DWDM, which is the backbone products, as well as the GPON products, which is fiber to the home products. And also we started to work with a lot of system integrators who have been securing business for us both in the GPON segment as well as for the switches, which is the Ethernet switches that we produce, which are used, for example, for video surveillance and safe city kind of projects as well. International again was 41% of our Q2 revenues, and if I take half year as an aggregate, we had an 89% year-on-year growth. And again, we believe that international will continue to grow as it has been doing for the first half for the rest of the year as well. I'm also happy to say that we signed a new global OEM customer who would be taking our products and selling it in different parts of the world. And in addition, we also had 5 new customer wins across multiple geographies. Within international, again, like last year, Africa has been doing extremely well, and the order inflow as well as the revenue pipeline that we see looks very healthy for international as well. In terms of supply chain, which is of course a topic that impacts lots of industries, there clearly is a global shortage of semiconductor components, and many of the suppliers have increased the lead times from 40 weeks to 60 weeks and so on. And many of them have also increased prices in terms of the component prices. And there's a whole chain reaction happening in the industry, which started from semiconductor foundries to chip suppliers, etc. From what we hear from our component suppliers, earlier estimate was that by end of this calendar year, the semiconductor shortage would come under control. But the way things look like, this shortage and this supply-demand imbalance is likely to continue in the second half of next calendar year as well. So we will have to take more advanced inventory actions for securing components to ensure that our supply chain continues to be operating healthily. But on a broad basis, there's also a little bit of volatility in the sense that the supplier commitments in terms of what they are supposed to deliver are also not being honored at times, and hence a little bit of volatility comes in the way of revenues as well as margins for us, and which has reflected in our Q2 performance as well. Going to the next slide, which is just a pictorial view of the revenue by segments compared to FY21. On the left-hand side, as you see, 40% came from international, around 17% came from India government, and 43% came from India private. Correspondingly, for the first half as an aggregate, 46% came from international, 41% from India private, and around 13% from the government business. And within government, critical infrastructure is slightly higher than the BSNL and BBNL revenues. So if I were to kind of see the run rate business, which is the combination of India private plus plus international, contributed to around 87% of our total during the first half, which is a 67% year-on-year growth for the two segments combined for the rest of the year. For the India government business for the rest of the year, while we have won a lot of tenders and orders, the revenue outlook is not that great, whereas there's still a whole bunch of large tenders which are in the offing, of course from BSNL as well as from railways, power and others. So we believe that those tenders will something that we could potentially put into bookings this year and will majorly go into revenues during the next year. Going to the next slide, which is the financial update slide. Since I've already gone through the Q2 numbers, I just wanted to kind of quickly summarize the first half numbers. So for the first half, our net revenues were 317 crores, which is a 72% year-on-year increase. EBIT was 1.3 crores, PBT is 11.7 crores, PAT is 11.2, and EPS is 1.17. And if you look at the trailing 12 months, the corresponding numbers are 647 crores of revenues and 5.72 EPS. So basically, the way I see things is that we always have a seasonality between the first half and the second half, with second half being significantly stronger than the first half, and we expect to see a similar trend in the current financial year as well. And especially given that we have a pretty strong, probably the highest ever order book that we have, we are comfortable that a second half should be a strong half for us as well. Going to the next slide, which is key financial indicators. If you see cash flow from operations in Q2 was 67 crores. Inventories are at 226 crores. Trade receivables are 414 crores. Net working capital came down to 481 crores, and cash and cash equivalent are 1195 crores. On the inventory side, we had a slight increase of around 25 crores. This was primarily because we have been taking longer action for inventories, and there would be, again, as I said, volatility in the inventory levels during the next few quarters. Trade receivables actually came down on an absolute basis to 414 crores, and we collected 221 crores during Q2. Although the payments from BSNL continue to come in, but they are coming in at a slow pace. But we do believe in the next 2 quarters we should see a slightly better collection from BSNL as well. Working capital correspondingly has reduced by 24 crores, primarily because of cash flow from operations, which have also improved. And again, I feel that over the next few quarters, we'll continue to see more normalization on the working capital side. Cash position, of course, improved to 1195 crores, primarily because of 837.5 crores from Panaton Limited, as well as from the the cash flow from operations that have added in. So net, as in the past, we continue to be a debt-free company, and from a balance sheet perspective, we are quite healthy. I will now go into the next two slides. First slide is just to give you a sense of all the products that we have today, and then I also wanted to kind of highlight what's the new product that we are doing and what is the stuff that we are doing for the 4G and potentially for 5G in future, so that we all have a good sense of the way our product portfolio is expanding. If you see the picture that is there in the next slide, which is titled Expanding Product Portfolio Wireline plus Wireless. So far in the first many years of our company, our primary focus was on products which are on optical fiber. So we had products in the access side, which is the fiber to the home or GPON or NGPON technology. After that, we come to the transmission part, where we had technologies like packet transport and so on. And then when you come to the core, you had the technology like DWDM, which is very high capacity backbone network. So what you've also seen now on the access side, so our wireline portfolio was optical transmission, broadband access, as well as secured Ethernet switches. What we are adding now in terms of major revenue potential in future is the wireless product, and on 4G technology, which is the LTE technology, which is also used for 5G. We have built a radio access network, which was loosely called the base stations, which will give both fixed as well as mobile broadband services. Our initial version of the product was for fixed broadband, which was something which we have been getting revenues internationally, and over the last couple of years, we have enhanced that product to also support a full-fledged mobile broadband. So our 4G product today is similar to any other 4G product in the market, a 4G base station or radios as they call it, so that we can offer all kinds of services, whether it's mobile, fixed, on voice, as well as video, as well as data. And the good part, as you can see from the picture, we have a platform approach to our products. So the smaller chassis, the box that you see, is the product in which all kind of access technologies have been built in. So earlier it was GPON and Ethernet, and in the same product we have been able to upgrade, and our base station is essentially nothing but one additional card into the chassis that you see on the left-hand side. And the core products are based, which are the larger capacity based on the 1600 platform, and which is currently being used for DWDM, metro, as well as for long-haul applications. Going to the next slide is a little bit more details on the product, because since this is the first time we are discussing about our mobile broadband product as well, I just thought it might be illustrative to kind of exactly give a sense of exactly what do we do. So the things that we do is, so in the mobile infrastructure there are two parts. One is called the base station, which you can see which is a part of the tower. So on the top of the tower you have a remote radio head, and at the basement of the tower you have something which is called the baseband unit. So these two together are loosely called base station. So the data from the base station, or the voice and the video or whatever kind of data from the base stations goes over a transport network, which is a cloud of 4G backhaul, which is what we have been doing in the past, and goes and connects to what is called the evolved packet core, which is usually a data center on which a certain kind of software is running. So what we have been developing, in the past we used to do the cloud, which is the transport cloud as you saw, but now we have enhanced our product, and we are also doing the base station part, which includes the radio, which goes on the top of the tower, as well as the baseband unit. And the good part for us is our baseband and the radios are 4G today and upgradable to 5G in future, just by insertion of new hardware and software. And it is a high capacity product. So there are two categories of base stations. One is called small cells or femto cells, which is for very low capacity, low number of users. And the other is called macro cell, which is what we typically use in all the mobile networks in India today. So we have actually built the macro cell. And whatever I'm just describing is actually going in trials with BSNL network in Chandigarh as well as in Ambala. There are multiple bands, which is frequency band, which is 900, 1800, 2100, 2500 bands. And we support all those bands, both in the TDD as well as the FDD spectrum. And similarly, the radios, the RRH that you're seeing on top, have different power capacity. So you can have 10 watt, 20 watt, and 40 watt, and we support all of that as well. So in that sense, our base stations that we have developed are very competitive and globally state of the art, and also upgradable to 5G from a future perspective. And the good part is all of this is a part of our ultra converged broadband of the UCB family that we have been shipping for more than 5 or 6 years in terms of our basic product platform. So this just gives you a sense of what we do. So typically now, once these kind of networks get deployed, we could basically connect any mobile phone or anything that you connect today onto a network that is built on our product. So now with this, you can see that we are doing pretty much end-to-end products from access, which is fiber-based access like FTTX, wireless access, which could be 4G or 5G. Then we do the transportation function, and then we go to the core. So I think this is where we are coming in. Just to clarify, the EPC, the core for the BSNL network is not of Tejas. It is of another company, which the front-end system integrator is offering as a part of the entire end-to-end solution. I'll go to the next slide, which is just to, again, summarize the strategic partnership that we have with Tata Group. So really the coming together of Tata and Tejas in that sense, brings in all the capabilities that we have built in terms of our R&D, in terms of our product ownership, IPR, as well as a track record of building globally competitive products which have been deployed in more than 75 countries and very, very large volumes. And with Tata coming in as a part of a strategic investment, they bring in the global branding, the trust, the deep relationships in terms of sales with tier 1 customers, the balance sheet strength to invest aggressively in R&D in terms of building, the state-of-the-art technologies and so on. And of course, the ability to execute large deals and their focus on the entire value chain of electronics from end to end. And these two together, provide us with an opportunity to build a global top-tier telecom equipment OEM from India. At this point in time, the open offer from the Tata Group and Panatone investment is active. I think as it's probably going to get over in a short period of time. And once that open offer process is over, we would then be able to, discuss more clearly and find out all the synergies. And I expect over the next few weeks, we will come out and share our strategy in terms of how all of us together are going to work and how we take advantage of the great opportunity that lies ahead of us. So I will be sharing the details of that aspect of our engagement in a future engagement with you all. Today, I just wanted to focus more on our Q2 results and the business in general. On the last slide, just to quick summarize before we take questions. So as you can see, we have continued to see a very strong inflow of new orders. And as I said, order book has increased and it's at an all-time high of 783 crores and has been continuing to be building up over the next few last quarters. Revenue growth from run rate customers, which is India private and international, has been very healthy. We do see challenges in the global semiconductor supply chain, which will impact our revenues and margins. It has impacted to certain levels in Q2, and I do see volatility continuing over the next few quarters as well. On our end, we are, of course, taking advanced inventory actions and procurement actions, but at the same time, there is no answer if the supply chain has some turbulence, and we will definitely be impacted by it as well. We see promising outlook for our wireless radio access network, the RAN product, the 4G LTE that I talked about, which will be upgraded in future to 5G. And it definitely increases our addressable market to quite a bit. In India alone, there are large opportunities which are ahead of us, and we believe that these anchor customers will potentially provide us a good foundation, basis which we can start selling them in international market with a stronger sales partnership that we have available to us today. And of course, with the strategic investment from Panatone Finvest, which is a Tata Sons subsidiary, we believe we are very well positioned to invest and accelerate into different programs and make sure that we can, grow and become a much larger company in a short period of time. That is where I would stop. Thank you for, bearing with me, and we can now open the floor for questions.
Thank you very much. We will now begin the question and answer session. Anyone who wishes to ask a question may press star and 1 on their touchtone telephone. If you wish to remove yourself from the question queue, you may press star and 2. Participants are requested to use handsets while asking a question. Ladies and gentlemen, we will wait for a moment while the question queue assembles. The first question is from the line of Pranav Kshatriya from Edelweiss Securities. Please go ahead.
Hi, Sanjay. Thank you very much for taking my question. First question is, a little more broader picture on, how one should see the, evolution of Tejas given it is under now new promoters. And this is especially, from the context of if you look at the telecom equipment industry, this is a notoriously long sales cycle industry. And one really needs to put in a lot of effort in terms of the investment, IP, etc., to really scale up in this industry. So how should we see the investment going forward into this space in terms of the number of people acquiring IP, organic, inorganic, etc. So that's my first question. Secondly, you talked about in fair bit of detail on this wireless RAN solution, what has been rolled out by Tejas. Just wanted to take understand one part. If you look at the new ecosystem which is emerging, which talks of virtualization of the RAN, in which most of the people are considering virtualization of the BBU. Now, how should one see, if we are going to move to more virtualized RAN? Is that what is the play for the new system which you have rolled out? So these are my two questions. Thank you.
Thanks, Pranav. Let me start with the first question. So the way to think of how our future will scale up. So we really have two different dimensions in which things will happen. Number one, that for optical as well as the broadband access products, we already have the products which are globally competitive, which we are selling quite well in India, quite well in few other markets, and we just need to find ways to reach out and access a much larger, customer base with that. And so that would be, let me call it the sales expansion and leveraging that we would do in the next, 12 to 18 months in terms of stepping up to the plate with what we already have from a technology angle. So that's one part of it. The second part of it is on the R&D side. R&D side, we have a pretty rich portfolio of products on the wireline side. We have started to, step up the investments on the wireless side, and we have the 4G product, which is currently today based on the same technology as the 5G, which is LTE. And we are investing into that to make sure that the anchor customer that we are working with today in India, we can basically increase that. And because there's still a lot of 4G deployments happening in the world, so that's one part. The second part, so we will be investing into more R&D in terms of 4G as well as for 5G. Some of it will be organic, some of it will be inorganic, and we will be basically putting together all the resources that we think we need to have to accelerate all of those programs, which is what I kind of alluded to earlier in my conversation. Coming back to the second question, which is kind of related to the last part of my answer earlier, is that in the 5G ecosystem, there are two kinds of architecture, if I were to say, or two kind of use cases which are emerging. One is called 5G NSA, which is non-standalone, which basically means exactly the product that I showed in the pictures today, which is basically a 4G anchor, and then you add a 5G upgrade card, and you add the 5G radios, which means the radios which work in the 5G band, and all of that still works out of the same baseband unit. So the 5G NSA architecture is what we already have in the current product. So that's one part of it. A significant part of the investments in the world today are actually happening in the 5G NSA portion. The second architecture, which is evolving, is exactly what you said, which is the Open RAN and virtualized architecture, where the radios would be still there, but then you would virtualize a significant part of the baseband, and then you, of course, will virtualize the core 100%. So we are looking at ways in which either as a combination of in-house R&D that we are doing and combination of interesting inorganic options that may be available, we would be looking at what's a good way for us to compete in a 5G ORAN architecture as well. So I would say that that is a part of the stuff that we would be strategizing and coming out with a plan, which I would be sharing in the next few weeks. But clearly, we would be expanding our focus in addition to from wireline to wireless as well, because we do see large opportunities in the home market, large anchor customers in our home market, and using which we can leverage with the new sales and the strategic relationship that we have on a global basis as well.
Okay. Thank you very much for the detailed answer. Really helpful. Wish you all the very best.
Thank you.
Thank you. The next question is from the line of Mukul Garg from Motilal Oswal. Please go ahead.
Hi, Sanjay.
Hi, Mukul.
Sanjay, two questions from my side. First, on the usual semi-component shortage, what was the impact on revenue and cost for you? It looked like there was a very meaningful cost impact this quarter. And also, you were talking about, you have been talking about securing component supply, but clearly there was some supplier backing off this quarter, as you highlighted. How should we see it from the inventory buildup which you are doing, and what is your confidence on the ability to deliver the orders which you already have in hand for the second half?
Okay, so good question. So let me start off with the first one. So what has been the cost impact? So as you can see, around 240 to 250 basis points of cost impact was there in this last Q2, which has adversely impacted us because many of the suppliers, either we had to buy the missing components in spot, or we had to pay expedite fees and stuff like that. So I think that was a concrete impact that we had in this quarter. To quantify exactly how much we of course wanted to do, we have a lot of orders in hand. The good news is the orders have just been postponed. We've not lost any order. Actually, on the contrary, we could have won a lot more business than we actually did if we actually had good control on inventory in terms of availability of components, so that we could have committed to a delivery time that the customer wanted. So we could have won more business, which we could not because we did not have the assurance of inventory availability. So that's the second part. The third thing you question is that how is our coverage for the rest of the financial year to be able to meet our revenue target? So we had actually been, even earlier in this year, we had been taking inventory actions. We have been, putting in all the orders. If I look at the integrated view of Q3 plus Q4 and see that for what our target revenues are, do we have enough inventory coverage and do we have enough components coming in within the time period that we need? I feel reasonably comfortable that that is indeed true. Of course, as I said, there could always be a little bit of volatility because of certain push-outs or decommits or things of that nature. But barring that, I would say for the rest of the financial year, since we had taken early inventory calls and inventory actions, we feel comfortable that we should be able to meet our revenue plan for this year. In fact, as we talk, we are already taking inventory actions for next financial year. Q2, Q3, Q4. So I think that just gives you a sense of advanced planning that we have to do now.
Sure. And just a clarification on the earlier part of this question, is the new inventory which is coming in going to be even more impactful on your margins, given that things progressively have been getting worsening and the visibility on normalization is going down? So should we expect a meaningful impact on profitability, at least in the near term, next 1 to 2 quarters? And a separate question was, you earlier mentioned that on the 5G SA RAN side, you will be looking at inorganic opportunities, or will that be a partnership opportunity?
So let me answer the first question first. So coming back to margin impact, we already had a 250 basis points margin impact in Q2. So with larger volumes in Q3 and Q4, I think the margin, would be hovering around, the current levels. You're right, progressively costs have been increasing in the supply chain. So for us, it's a question of balancing 2 or 3 things. One is if our blend of our customers, for example, some of the international customers, we get better margins. So combination of what is the business blend between international and India, combination between products, they have different margins. I mean, products which are running in high volumes, we have better margins. So I think combination of all of that will eventually determine the impact on the margins. There will definitely, as we saw in Q2, there will be some impact on the margins, and we are continuing to evaluate that in terms of what we can absorb, what we need to even discuss with our customers. So for example, some of the new bids or new contracts that we are signing, we are able to negotiate the right kind of price structures. Some of the existing ones, it may be relatively difficult, but some of the customers are open to securing supplies, even if it means paying a small amount of additional cost. So I think all of those combinations are kind of playing their role together, and it's very hard to exactly pinpoint how much the margin will be impacted, except that it will be impacted, and Q2 is some indication that we saw. Q3, Q4, we'll have to kind of wait and watch how things happen, because some suppliers have increased, some are still holding on, some have said, okay, I might increase from January. So there is a little bit of a, I would say, uncertainty in that aspect as of now. Coming to your second question about the 5G SA option, will it be organic or will it be inorganic or will it be partnership? It will be a combination. So a lot of the technology that we are developing for 4G, by the way, first of all, the base LTE technology is same. A lot of the software would be reusable. A lot of the radio technology that we have built over the last few years, we just have to build radios in different bands, but they will be FDD radios or things of that kind, of the same different capacities. So I think there will be a lot of reuse of what we have. We would definitely be looking at partnerships. We'll definitely be also looking at inorganic options, because they can give us a way to accelerate our programs. So I think all of that would be something that we are actively working on, and as I said, over the next few weeks, we will be sharing a lot of clarity around all those issues.
Great. Thanks for answering my question, and best of luck for the rest of the year.
Thank you, Mukul.
Thank you. The next question is from the line of Sangam Iyer from Concall Investment Management. Please go ahead.
Yeah, hi, Sanjay ji.
Hi, Sangam.
Hello. Hi.
Yes,
Sanjay ji, just wanted to check with you regarding this, the bad debt provisioning that we did. Is this the last final assessment in terms of the bad debt provision requirement there, or what is it exactly catering to? Can you explain? Because I couldn't understand the notes there.
I didn't get your question. Can you please repeat?
There was this bad debt provisioning, the 5 crore that was there in the P&L, if I'm not wrong.
Oh, okay. So there's a ECL, there's a estimated credit loss provisioning of 5 crores. This is more like Venkatesh maybe can explain.
Yeah. So this is more of a provisioning what we have done for the uncollected portion. As and when we collect the money, right, it will get reversed. See, basically,
is this for the international business, or how is it?
No, it is across. It's a model, right? It's completely a model.
Right.
Within that model, you see, in this quarter, something would have moved to one of the bucket, larger bucket. If that collection doesn't come, then that as per the ECL model, we have to make a provisioning, right? That provisioning of 5 crores hit, which we have taken it in this current quarter. And as and when we collect the money, then we will get the reversal out of that. This is only a provisioning part.
Okay.
Just to simplify, across, so we have a model that from any customer, if there's a payment delay beyond a certain threshold, we put a provision for that in that particular quarter when the payment was supposed to come and hasn't come. And as and when in future it does come, the same is eventually reversed. So it's a ECL model that we have been following. By the way, this has been in place for last several quarters.
Correct. No, but last couple of quarters I saw 1 crore and then 5 crores. So that's why I was just wondering whether it's.
So maybe some customers might have fallen into the bucket, so we just put it there. But if it comes into Q3 or Q4, it gets reversed essentially.
Got it. And so, and secondly, in terms of the revenue growth trajectory that you spoke about, that second half will be much stronger than first half. Could you throw some more light in terms of the backlog that's expected to get executed in the second half now, given that the durations are also increasing a little bit on the order book that we receive. So how should one look at the whole the execution?
So out of the order book of around 783 crores that we had at the beginning of the year, beginning of this quarter, as on October 1st. And again, I should clarify that the order book is physical purchase orders in hand. It does not count the run rate business for which orders keep coming, with any amount of frequency, which is a big chunk of our revenues as well. So around 45% of the order book would be executed in the current financial year. And on top of that, we of course have run rate customers whose orders will come, for whom we have planned the inventory because they've already forecasted the same. And basis which I mentioned that first half to second half ratio is around 40-60. So I think we feel that the way things are going, there's a lot of business there. It's just a question of executing with the supply chain support over the next 2 quarters.
Got it. So as a follow-up on the Mukul's question on the inventory types that we have currently, you indicated that you have visibility for the inventory to supply and meet the demand. So would it be fair to assume that it's sufficient enough to meet the 60% or 40-60 ratio that you are alluding here?
So let me put it this way: we have placed all the orders well in time for securing that amount of inventory. Having said that, that alone is not sufficient in these days because inventory still should come on time, and there should be no decommits, and there should be no delays, and so on and so forth. So I think barring those kind of things which our supply chain team is of course tracking, we believe that we have the right coverage for inventory for securing those kind of revenues during the year.
Got it. Lastly, when given that ours is a pure product company here, as we grow and as we expand on the execution part, when should one look at the operating leverage kicking in for us? I mean, I understand now because of the the supply shortage constraints, the operating leverage is not visible immediately because a lot of this goes into your cost escalation part. But having said that, ideally speaking, by when if it was a normalized situation, what kind of operating leverage can one visualize here from the perspective?
If you see based on the current cost structure, we need to be around 200 crores per quarter, around 800 crores per year kind of revenue to get to the baseline that we were a few years back in terms of operating performance. Of course, our cost structures have gone up, and it's likely that as we increase our investment in R&D as well as in some aspect of sales, the cost structure may further go up. So realistically, what's going to happen is all of that has to kind of get compensated with higher revenue base going forward, and we would of course be judicious in making sure that as we are investing into additional cost, there should be a pipeline that we are building for increasing additional revenues. So I think we're as a product company, we are not that far away in terms of hitting that cost point, the operating leverage point, and it's a question of and plus I think especially with some of the stuff that we're doing in wireless, the deal sizes start becoming large, and even if you are able to secure a part of one of those deals, we could get a significant revenue kick up because some of these things could be required as early as next financial year in terms of revenues and supplies, and hence as I said, the operating leverage could start kicking in. Of course, this financial year is just going to be continually incrementally scaling up, but going forward, I think we should be able to start seeing higher numbers which will give us the operating leverage.
Got it. And final question before I join back the queue. In terms of the order backlog that we have, can you give us a breakup between India government, international, and India private?
So I don't have the exact breakup in front of me, but typically I would say between India private and international, which is what I would call is the run rate business, that would be around close to 45% or so, and 55% would be India government, somewhere in that ballpark.
Okay. Thanks a lot, sir, and all the best.
Thank you.
Thank you. The next question is from the line of Madhu Babu from Canara HSBC. Please go ahead.
Yeah, sir. On the steady state, how should we see the working capital cycle, inventory, debtor, and payable days in the business? And within the subsegments, how do you see that spanning out?
So by the way, so in terms of as we have seen in the past, I think our DSOs at a steady state should be around 135 to 145 days. Our payables we have been able to manage around 90 days, and if I look at inventory, usually it has been around 80 to 90 days. So I think on a steady state, we believe that in the past we were able to get to around 130 to 140 days of working capital, and we should be able to get to that normalization in the next few quarters. Current quarter is definitely, as I said, is not there. I think although we have made a lot more progress in the current quarter, but I would suggest that it will take a couple of quarters before things start normalizing.
Okay. And going forward on the Indian government especially, how do you see the scenario there, especially in where you are bidding on the BSNL and all in the future contracts?
So India government, we basically see, three big business segments emerging in terms of the revenue possibilities, One, let's call it the critical infrastructure, which is railways, power, oil and gas, defense, smart cities, all of that stuff. So that's lots of tenders anywhere between few crores to 50 to 100 crores, right? And there are lots of those happening, and they're all covered under Make in India. They are good margin business for us. We've been doing extremely well in that segment. So that's one part of it. The second part of it is that if you look at BSNL and BBNL, the BharatNet, let's call it the Department of Telecom related projects, which could be either BharatNet or it could be BSNL. That's the other bucket there. And BharatNet, for example, there is a large outlay for the next phase of BharatNet. Some 19,000 crores has been put aside. The execution model of that is getting fine-tuned, but the technology products that we have will significantly be used in that. So that's another large bucket of revenues which can potentially happen over the next few years. And then the third one is the BSNL themselves, BSNL the operator. So BSNL the operator will require two kinds of equipment. If I were to talk to you 1 year back, we would only be addressing one kind of their equipment, which is the backbone equipment, the optical transport, which is DWDM, for which tenders are on, and they have to enhance their backbone capacity for 4G and 5G, from access to core to long haul to everything. So that's one part of the business that we execute. That itself will be quite significant because they have not upgraded their backbone capacities for the last many years for a variety of reasons. And if they're going to build a 4G or 5G network, without upgraded backbone, they cannot really have a viable network there. So that's one set of business which is coming, which is what we have been historically working on. With more recently, we have also said, okay, they're going to need 4G base stations, which are potentially upgradable to 5G in future. And that is another very large project. The total outlay for around 57 to 60,000 base stations is anywhere between 10,000 crores or so. So I think that would be another project, part of their business that we are currently working on. We have a proof of concept going on as a truly Indian ecosystem, which is being trialed in Chandigarh and Ambala. We believe, we are going through the process as required, and once that is successful, we will have a large shot at that entire base station rollout that they would require, and that's something which would be a very large business. But the execution timelines could be quite short. It could be, over the next 12 to 24 months, if I were to put a timeline range. So within that period of time, you have to deploy a fairly large network, and that's where a large system integrators being in front of us and leading the deal would come to help us, because we would be the equipment supplier for the radio access or the base station portion. Core is being supplied by someone else. So I think these are three different distinct government opportunities. As I mentioned earlier, in terms of the backlog, there's a lot of backlog of business we have won from government, which will be executed in the timelines that the projects are continuing. On top of that, there will be more tenders happening in the rest of this calendar year, fiscal year, which will again become, orders to be executed in the next year, and then all these large opportunities that I talked about. So I would say there's a pretty large pipeline of government business. Some of it has no cash flow challenges, no payment issues, no nothing. Some of it is, of course, a little bit more trickier than the others. But if I look at the whole bucket and basket of business is very large. All of the government business is mandated by the two important clauses, rather regulatory clauses. One of them is Make in India. for all government procurement and all the products that we make are covered under that. So any buyer has to buy Indian products if they are available. And second is that there is a regulation mandate for all telecom products, which is private or in government network, have to come from trusted telecom sources. And there's a whole process of being given the trusted source accord, which I'm sure we will be getting at some point in time. So within those two clauses, all the government procurement has to happen, which potentially, as a part of the larger Atmanirbhar story, gives a benefit to companies like ourselves who design and manufacture their entire products within the country and have entire control of the IPR within the country.
Okay, sir. Thanks.
Thank you. The next question is from the line of Aman Dinesh Kumar Madrecha from Augmenta Research. Please go ahead.
Yeah, good evening, sir. So actually, I had 2 to 3 questions. So the first one was regarding, can you please give more color on the allowance for credit loss? So my doubt was regarding what we could expect, what could be the yearly run rate, like what would be the portion of the receivables which would go into the doubtful area according to you, and also out of this, what is the outstanding amount from BSNL and from other players as well?
Okay, so I'll let Venkatesh answer that question.
Yeah. See, as I mentioned in the call earlier, it's not that the run rate of, we make some provision out of it. It's a ECL model, expected credit loss model, wherein some of the collections get slipped out to the next quarter or and next half year, right? Then, according to that model, we had to provide certain percentage of the provision. We need to make the provision. In this quarter, some collections have got slipped out. That's the reason we had provided that 5 crores, which cut across lots of customers. It's not as specific to one customer, right? So that is how the allowances for credit loss we have been providing. As far as the BSNL is concerned, the old BSNL outstanding as of September 30th is around 102 crores. Of which we have already collected around 32 crores in the first half, which is 15 crores and 17 crores in Q1 and Q2.
Okay. And do we expect that the remaining would be collected in timely, like there would be no write-off from that thing?
Yeah, the collections were a bit slow, but hopefully we should be able to collect this the balance in maybe in the next 2 quarters or so.
Yeah. So by the way, just in terms of the provisioning versus write-off, if you look at historically for the last several years, the total write-off, which is bad debts which we have not collected and written off, is very, very small, less than a percentage of our revenues. We do provide for provisions which get reversed as and when they collected. So typically what we have seen is that we see delays sometimes in our collections, which is why we provide the estimated credit loss. But the possibility of a receivable going bad is been so far very, very small. Lifetime in our company has been around 1.2% or something like that, which is what we have actually written off.
Okay. And I had a couple of questions more. Like, given that you recently Tata acquired a stake in the company, so I just wanted to understand, like, Tata Sons company like TCS and Tatacom, would they work as an integrator for the company? Like TCS would provide the software and Tejas the hardware. Like, how would the things be going forward? Like,
so first of all the companies are independent companies. I'm sure they would be working on within the regulatory framework of whatever is the related party transactions, the arm's length pricing and all that stuff. Having said that, those are all things which we are working out. Clearly, we are working with TCS in the BSNL project, as is publicly known. Tata Communications is a long-standing customer of Tejas for more than 15 years, and a lot of their networks are provided, equipment is provided by us. There are many other group companies within the Tata groups who have a requirement to procure telecommunication equipment of the kind that we produce. And we definitely believe that we have very competitive products, and we are already doing business with most of them, and we will potentially be looking at ways to enhance our reach through them. So I would say that the objective of the strategic partnership is that there's a lot of customer connects, there's a lot of relationships, there are a lot of global solutioning which needs to get done. And if we have a competitive product and a good solution that we can put together, definitely those are the things which we would like to leverage with the strength of the group.
Thank you, Mr. Aman. May we request that you return to the question queue for follow-up questions. Thank you. Ladies and gentlemen, please limit your questions to one per participant. Should you have a follow-up question, we would request you to rejoin the question queue. The next question is from the line of Harshil Chorela from Pragya Equities. Please go ahead.
Hello.
Hello, Harshil.
Hello. Yeah, hi. So I just wanted to know what would be the plan for the next couple of years? Where do you see the company going forward? I think it must be asked earlier, but I just joined. That's why.
So one thing I mentioned on this one is that the strategic plan for the company post the investment from Tata Sons, since the open offer is still on and it will be over in the next few weeks, we would be coming out and sharing some of those ideas after that. So in that sense, since the long-term strategic plan is something that I would like to have a focused discussion on, that is something we will be sharing over the next few weeks, and just because of where the current open offer situation and the regulatory things are. So we would be sharing that over the next few weeks, but not today.
Okay, so there would be another conference call for that again?
Yes, we'll find the right way to communicate in our strategy going forward, because the whole purpose is that definitely will not be doing incremental stuff from where we are today. We would be looking at how to take advantage of all the synergies that we envisage and how to accelerate all things. What are the kind of investments? What are the kind of opportunities? What are the kind of synergies we expect to see? So all of those questions, as I said, in the next few weeks we'll be answering. Yes.
Okay. Thank you.
Thank you. The next question is from the line of Udit from Catamaran. Please go ahead.
Yeah. Hi, hello sir. Can you please give us idea on the products that you're planning to manufacture through the PLI scheme? And secondly, since previously we were outsourcing all our manufacturing activities, so how will this work now?
That's a good question, first of all. So let me answer the first part. All the products that we today design and manufacture are covered by the PLI scheme, which is FTTX products, which is GPON family, both the head-end equipment and the customer prem equipment, the transmission products, as well as the 4G and 5G products that we're working on. So everything that we do is covered in the PLI. So that's the good news. Second thing is that how will we benefit from the PLI scheme, because a large part of our manufacturing is outsourced. So the way the PLI scheme is designed and the way we have put in our application investment, it does not warrant us to change our business model. So we will continue to outsource a part of our manufacturing to contract manufacturers, and the final assembly and test would be done within our premises. And for the part of the investment that are required from the PLI threshold, we believe we should be able to meet those investments in the normal course of our business because of the way we do our manufacturing. So we will continue with the current model itself, but we should be able to take advantage of the PLI scheme as it has been designed today because of the investments that we would make in the capital. For example, test equipment, prototypes, these are all allowed under the PLI schemes. And some of those things or expansion of that factory premises, which we'll anyway need to do for larger volumes. But those will all be, as I said, incremental investments in the normal course of business for us, and we should be able to take advantage of those through the PLI scheme.
Okay, and given that most of the, as you rightly mentioned, most of the core manufacturing will be outsourced, so roughly 100 crores of investment could generate how much of yearly revenue, annual revenue?
So luckily for us, we should be able to generate a very, very high amount, thousands of crores of yearly revenues even with the investment that we are doing, because a significant part of the capital intensive manufacturing is outsourced. And with whatever asset light model of investment that we have for manufacturing, which we will be making the investments over the 100. So 100 crores is the threshold which was there. I think our application is around 115 or 120 crores, something like that, over a four-year period. So I think we should be able to meet our annual thresholds. And once we can do that, whatever revenues we do, the incremental revenues from the base year would qualify us for the PLI incentive, subject to us having met the minimum threshold of investment which we will meet.
Understood.
So luckily for us, the revenues can be very large and the investment don't need to be.
Understood. Thanks a lot. That's it from my side.
Thank you.
Thank you. Ladies and gentlemen, we will take the last question from the line of Nakshita Mehta from Credent Asset. Please go ahead.
Hello. Thank you for taking my question. So my question is one on the product additions that you're doing. Can you throw some light on what is that going to do for 5G and how is that going to play out, the entire 5G scheme?
So as I put into the pictorial slide in my presentation, so there are two elements of 5G that we will be potentially addressing. One element we already do it today, which is the backhaul, or the when we carry the signals from 5G network onto the fiber and everywhere else. Those products we already have today as a part of our optical as well as the fiber access products. So that's one thing, which is how we are addressing the 5G. The second aspect of 5G is the radio access network, which is the base station part of 5G. So currently we have 4G, which is what is in the field and shipping. The same platform is upgradable to 5G with incremental software and hardware, and that is what would allow us to also build a 5G radio network. So between those two elements, we would be addressing both the large investment opportunities, the capital investment opportunities that will be opening up in 5G.
Okay. So by when can we expect these things? As you said that you just need some sort of a part to activate the 5G, right? To upgrade it to 5G. So by when can we expect this to come into play? Is there any timeline?
Yeah. So I think the product roadmaps are in place. At least for Indian market, first the spectrum auctions have to happen, and then for 5G, and then the rollouts will start. So my sense is that only sometime in the second half of next year or later part of second half of next year, there would be some rollout activity on 5G. And our intent is that at least the transport part for 5G would be used for that. So in fact, if you've read one of the press releases we had done with a customer in India, part of the equipment we are supplying for them is for 5G, actually, for the 5G capacity augmentation in metros and part of the access in the edge network. So that would come into play. The radio access part of 5G would be a slightly longer term thing because it's on the roadmap. So those things I would only be able to share once we have more concrete rollout plans from our side on the product development. But the fiber side of things is already there.
All right. So my last question is regarding the Tata, license. So you said that you'll be using Tata. I mean, the synergy is that you can have more access to customers. So what kind of customers are you looking at? Are you looking at any global customers? Or are you only looking at local?
No, definitely all customers, global as well as local. The global part is going to be quite exciting for us because one of the challenges which Tejas had in the past was that while we did well in India, we had decent success internationally. We were never able to get into very large networks in the tier 1 markets like US, Europe, Australia, New Zealand, Japan, and so on and so forth. Because to get to those customers, you needed to have a strong presence, strong brand. You needed to be having deep relationships. So we do expect that the synergies from the group companies in terms of having access to those customers, having working relationships with things, because telecom is a segment which has been quite prominent vertical for all the companies in India who are working with global customers in the IT services or system integration space. So I'm pretty sure we'll be able to leverage those synergies internationally. Even in India, if you look at some of the very large projects, like the BSNL one that we are talking about, we may not have wanted to do it on our own because of the nature of the size. If it's a 10,000 crore project, we may not want to go on our own because there's a lot of elements which are coming into play for that. So even in India, very large deals, we can potentially work with system integration front ends ahead of us, and that's where a lot of the synergies will come. So yes, customer acquisition globally in the large scale market as well as in India would be something that we definitely look forward to.
Yeah, just a follow up on this. Is there any investment being made by Tata, or is it just an strategic partnership?
No. In fact, as I mentioned in the things, we have already received. So there's a commitment of 1,850 crores of investment in the company, out of which 837.5 crores has already been paid. The balance will be in the form of warrants, which will get converted. The first warrant converts in, I think, 9 months. The second one is 18 months from the date, 11 months and 18 months. And so there's a very sizable amount of cash which has been infused in the company already and is available in the form of convertible warrants. So there'll be cash investment, and of course the strategic alignment is clearly something that we leverage. So it's both, absolutely.
All right, perfect. Thank you so much, and all the best.
Thank you.
Thank you. Ladies and gentlemen, that was the last question. I now hand the conference over to Mr. Pranav Kshatriya for closing comments.
Thank you everyone for participating in the call. I'll hand over the call to Mr. Sanjay Nayak for the final remarks. Thank you.
No, thank you, Pranav, and it's been good interchanging ideas and addressing your questions. As I said, the good part is the business inflow is very good. Order book is continuing to increase. So the demand for the equipment is good. We do have some challenges on the supply side because of the semiconductor situation. We have taken adequate action, so that's going well. The last part is, of course, the strategic alignment with the Tata Group. We will start to play out all the synergies and all the plans that we have, and we'll be sharing those with you in the future calls. And then the last part is the advancement in our technology in terms of introduction of the new wireless products is quite exciting for us because we do see a lot more opportunities and markets opening for us, both in India and outside. And all of those, mean that as management team and the company, we are quite excited about the opportunities and the possibilities to scale the company and to much larger size over the next few years. So that's really where I would stop, and thank you.
Thank you. Ladies and gentlemen, on behalf of Edelweiss Securities, that concludes this conference. Thank you for joining us, and you may now disconnect your lines.